Mm-hmm.
Good morning, Raymond. Thank you for taking the time to be on the show today. It's a pleasure to meet you. And
good morning, Aline.
Hi. Yeah, I saw you before, so you're not a surprise to me. I saw you on the show like a month ago.
Mm-hmm.
But I probably was not paying close attention to what was going on because I was like multitasking and all that. But now you have my full attention. So
very
that's
good.
it. Okay, so Raymond, thank you very much. So you would describe yourself as an advisor or consultant? Is that what you would describe yourself as?
Those words both are a fit, yes. A coach. And I'm involved in a number of business enterprises.
Okay.
So I'm an entrepreneur.
Okay, so when you say you're involved, I mean, you spread out your investments in different in companies?
I have a corporation.
Yeah.
So that's the umbrella for everything I do. So I'm in the construction business. I am in the investment business, and I am also in the insurance business.
Wow, that's good. That's good. So you need more than 24 hours a day for that, no?
I run 14 to 16 hours a day, 7 days a week.
Oh, 16 to, my goodness. So do you occasionally take a day off or a vacation?
I do, or at least a part of a day off.
Okay. And where are you located now? Are you in the East Coast?
I'm on the West Coast in British Columbia, Canada. So I'm in what they call the Southern Central Interior, the Okanagan Valley.
Oh, I didn't know you were in Canada. Oh.
Yeah, so north of Spokane, basically.
Yeah, I know. I've been to Vancouver. It looks like Seattle, a lot like Seattle. Although
yes,
2 hours from there, it's beautiful. It's like huge and grandiose, and it's beautiful outside of Vancouver.
I left the UK in 1975.
Yeah.
And I moved to Vancouver, and I've lived in Kamloops, Prince George, and Kelowna, Squamish, Sechelt, and Gibson's Landing.
Oh, okay.
Also the Yukon Territory.
Wow. So you love it there then, because you didn't try to move out of there.
Well, in 1995, I was working for an American corporation, and they moved me from Vancouver. They moved me to just outside Philadelphia.
Nice.
And so I've lived across the river from that city in New Jersey.
Yeah.
I've lived in Phoenix. I've lived in Denver. I've lived in Clearwater, Florida. I tend to move around.
That's good. That's good. This way you don't get bored, right? So you can meet new people.
Correct.
Yeah.
I like to fly. I like to drive.
That's good. So your newest idea is to try, I heard, to try to help other people reach your level of success. So what do? You give them one-on-one advice, or do you tell them what to do daily? What do you do?
I coach and mentor both in a one-on-one situation and also in one-to-many, so a group.
Yeah. What's the name of the organization?
I've branded myself the Tortoise Trader.
Tortoise, that means you go slowly but surely?
Slowly but surely. And profitably, I might add. Profitably.
Oh, you have done a good, profitable transaction. That's good.
Yes, yes.
So do you watch the market daily to make sure you're on the right track?
Well, initially I didn't because I was just trading stock options,
Yeah.
and on average it would be about a 2-week cycle for a contract.
Yeah.
So I would tend to keep an eye on it maybe once or twice over the course of the 2 weeks, but the last day can be quite intense.
Oh, because what you lose or win, right?
You lose or win, and I like to win.
Of course. But on the other side of the spectrum, someone is losing, right? When you win, someone loses.
Yes. Someone has to lose for me to win.
Yeah,
that's just the way it is.
Yeah. You don't feel guilty about that?
No.
No, I mean, you want to give back what you won once in a while and let yourself lose.
Traders, experienced traders, like to find ways to make money when the market goes up or when the market goes down.
Oh,
They
yeah.
like to win in both directions. So I pursue a strategy of placing 2 bets at a given time.
Okay.
And one of those is going to win and the other is going to lose. And I am going to scalp the difference.
Okay. Okay.
Yeah.
And the reason you do it that way is that you're not sure.
You only have a 50% chance of being right when you place a bet.
That's not good.
Mathematically, that's not that great. So I structure it in a way that if I win, my win is limited.
Yeah.
I have to accept that, but I'm happy to take it, always happy to take a win. When I'm experiencing that win, that means that my other bet is losing.
Mm-hmm.
Now, let's say that the reverse is happening and my win is going to be a loss.
Oh, okay.
My other bet, conversely, is going to be a win. So I can reduce my loss by getting out of that other bet before it expires. I buy my way out of it. Buy or sell, doesn't matter. I exit that position, and then the profit I make on that offsets what happens next, which is my contract that I've sold expires, and the broker tells me, hey, you have to buy 100 shares per contract of that stock because you guessed wrong. And so I now own 100 shares of stock.
Yeah, but not everybody can own 100 shares of stock. Unless the stock is $5. I mean, unless the stock is a low price.
I'm going to be buying those stocks for around $15 a share, which I can
that's
afford.
affordable. Yeah, that's affordable.
Now, once I've got them, I can then sell what's known in the business as a covered call.
Right.
Which is a very safe strategy because I own the stock behind the option.
Right.
So regardless of what happens, I can't go wrong. And so I repeat that for as long as I own the stock, and I will continue to own the stock as long as the price stays down. The minute it turns around and goes back up, I'm going to be forced, I'm going to lose those shares to the broker. And so what I've done is I've made successive trades that have all been in profit. And the net result is that what looked like a losing position in the beginning is actually a net profit at the end. And I've probably made more money than if I guessed right and I'd had a win to begin with. So overall the year, I'm seeing about a 50% return on investment.
Per year?
Per year. Better than your average hedge fund.
That's true, that's true. Now, let's say you own 100 shares. What's $15 nowadays? Not too...
well, that's going, I'm going to be out. I'm going to have $1,500 tied up in my account.
I know, but name a stock that's $15. Is very...
Ford.
Ford is $15?
Yeah.
Okay, so they should be much higher. I mean,
they have been, and they will be again one day.
Okay, no, they have been around for a while. They should be much higher. Yeah.
Well,
so you own it and then you bet that they will go up, right?
I own it. And as long as I own it, I am hoping that it's going to stay just under that price. Because as long as it stays under, the option that I'm selling is going to make me a profit. I'm going to be able to keep the premium that I get for selling the option.
Okay.
So when Ford turns around, though, the bet that I put on, the option that I sold, now the person that I sold it to wants to buy the shares because he can make a profit. Okay. So at that point, the shares go away. I don't have them anymore. The money in my account is freed up and I've made a profit. Not a huge profit, but a profit.
So someone is going to bet that Ford is going up and they buy it at a lower price.
Yeah, but what happens is it stays down, so they lose their bet. I keep the premium. So they bought the option, I got the premium. As long as the price stays below the agreed price, what they call the strike price, that person's going to lose. I'm going to keep the money. If it goes up,
I guess it's something you have to practice rather than talk about.
Yeah. Trust me, it works.
Okay. So with 50% gain, you can catch up real quick with a lot of people. It's not every day.
It's scalable. We teach people to trade so that they have what we call a good risk to reward ratio. And we teach them to never put more than 1% of their portfolio's value on any one trade or position. That way, if they do end up losing, and it happens, it can happen under certain circumstances, it's a loss that they can afford to absorb. And when they win, they're happy and they're keeping the money.
Okay, did you say you should not put more than 4% of your money?
1%.
Oh, 1% of your money.
1%. Yeah.
Okay. So that if you lose, it's okay.
Yes. Because you are going to lose from time to time.
Okay. Yeah. So you have you like to gamble, right?
It is a form of gambling, but if you go to Las Vegas, right, there's all the casinos.
Right.
The casinos, like the people that go into the casinos are gambling. but their mathematicians do it in such a way that they know they're going to make a profit.
They know at the end of the day, more people are going to lose.
Yes. And
And
so trading can be the same.
Okay. But
So
trading is not controlled by a house of gambling. It's controlled by what the people are doing with the stock, selling it.
It's a market, and nobody has any control over the market, although institutional traders, people with huge bank accounts,
Right.
can make trades that are so big that they move the market in a direction that they want.
Yeah, especially if they are managing 401ks or things, or big
Yes, pension
investments.
funds, insurance companies, those kinds, and the banks. I mean, the banks. This is what is incredible about what happens in America. The banks will take your money on deposit
And invest it.
and they'll invest it.
And
And
they
they'll
make,
keep all the money. They give you next to nothing.
yeah, they don't give us except maybe 0.5%.
Now, insurance companies have certain products where they guarantee that the money that is tied up in the policy, that is the cash value, they will guarantee a return on that. You never lose, even though the market can go down and they are investing in the market. They guarantee you a floor of something like 0.75%. So very small, but it means you never lose. Now they cap it at 15%.
Mhm.
And over time, we see that you average about 8% gain on the money that you've got invested with the insurance policy, which is, pretty decent. Over 20, 30 years, that's going to make a lot of money with compounding. So if they can afford to do that, pay you even when the market goes below, and you should be losing money, they guarantee that no, that's not going to happen. We're going to, your investment is safe. That means that a lot of the time they are making way more than 15%.
Oh, yeah, okay.
Oh, yeah. And so you can bet your bottom dollar that the banks are doing the same thing. They are making way more than 15% trading foreign exchange. It's mostly what they do. They do stocks too, but they do mostly foreign exchange. Now, let me put this in perspective. Your stock markets globally can be reckoned in billions of dollars of money traded every day. Billions. Sounds pretty impressive, but your money markets move, get this, between $7 and $8 trillion every day. Your cryptocurrency market is moving between $1 and $2 trillion a day. So that's where the action is, and that's where all the trading and the money making is done. And in those markets, those institutions are huge influencers, along with, the central banks of the different countries.
So did you invest in cryptocurrency?
I got interested in it. I've been doing options for about a year. And I recently got interested because I met somebody who's knows how to trade Forex and crypto. And he's been teaching me how to do it.
The thing is, with cryptocurrency, do you actually go and spend it to buy a car, for example?
You can.
Yeah.
You can buy property, you can buy You can pay for different commercial things like airlines, hotels. Some of the coins have a lot of utility, practical everyday uses.
Yeah, but some like Tesla is not accepting cryptocurrency anymore for buying their car, but I'm sure other companies are.
He now says that because the reason that he stopped is going away, China has shut down, he's going to get back into it.
No, he said he wants to create his own currency.
Well, he could do it that way, but he will be back into cryptocurrency with his vehicles anyway. PayPal,
PayPal
is doing it. Over the last 12 months, it's beginning to look like everybody's going to be doing it.
Because there's money to be made.
There's money to be made. Now, the governments are not thrilled about this. They're really not thrilled about this. The banks are not thrilled about this development. And so they are doing everything they can to keep the control that they've enjoyed all these many years. And so there's a battle going on between, you know, the crypto industry and the banks and the central banks.
Yeah, I guess it's going to get
we know who's going to win. We know who's going to win in the end. And so they will find a way to coexist.
Who's going to win?
The governments and the banks.
The banks?
Yeah, the central banks.
Oh, okay. Not the people.
No, the people are going to do rather better than they did before, because there will be, you know, the decentralized crypto industry will still exist. It's just going to be controlled and regulated by.
Okay. Yeah. Right now they're not regulated.
No, it's Wild West.
Yes, it is scary.
Mm-hmm.
I put $1,000 in currency and it went way down. I already lost like $700 over 1,000. I lost 70%. But a lot of people are putting huge amount of money in it, and they don't mind losing, I guess, because it goes up and down all the time.
Well, there's different ways of investing in cryptocurrencies. You can do the same thing as foreign exchange and trade cryptocurrencies against fiat currencies as pairs, or you can buy on an exchange. You can buy a cryptocurrency like you did and hold it and hope that it goes up.
It's just for fun. I tried it. It's just for fun. Well, let's see what happens.
It started 10, 12 years ago with Bitcoin. Yeah. Just the one currency.
That one did well.
It did well. It's still doing well.
Yeah.
But there's now about 8,500 versions of Bitcoin in the world. And the number's increasing every day.
Yeah, everybody's doing their own. Everybody's doing their own.
And they take time to come onto the market. Somebody has an idea, an application for the blockchain technology, and he creates what's called a project.
Okay.
And he tries to attract investment into the project. And so when an idea or a coin, an idea for a coin is brand new, you can't buy it on the exchanges. It's not listed.
Okay.
But you can go into the industry and say, oh, I want to become a player here. I want to put some money in. I want to add liquidity to your project while you develop it.
Okay.
And they will, that's called staking.
Yeah, you take a stake.
And they will reward you with coins, so that when they do their IPO, when they go live,
they're going to give you a percentage.
They're going to give you some coins. And then you hope that the value of the coins is going to rise after
Yeah, it's
that.
like
And then you can sell at a profit.
yeah, it's like options when you join a startup or something.
Yes, it's a futures market for cryptos. So,
And do you also gamble with Forex currency?
oh yes.
Oh, you do it all.
At the moment, I'm only doing it in a demo account. I'm learning.
Oh,
I have a mentor, an instructor, and yeah, so
you understand it?
I'm beginning to understand it. I believe that in a month or two, I'll be ready to go live and start trading Forex and crypto with
For
real
real?
money.
For real?
For real.
Oh,
For real. And after I've been doing that, maybe for a year,
then you'll know.
I'll probably add that to my offer, my coaching offer, if people want to do that as well.
Oh, okay, okay. Yeah, but that will be taking another hour of your day that is already full.
Yes, everything comes at a price. Everything. You want to
Yeah.
do more of this, you got to do less of that.
But
So,
besides increasing your net worth, what is the meat of all this? Do you have something substantial that you do besides trading?
yes, I'm in construction. And when I say I'm in construction, I don't have a hammer or a saw. I don't go onto construction sites. I do it virtually.
Oh.
Virtually. Okay. So it used to be, if I go back to when I joined the industry.
So you buy and sell property online?
No, I work with builders.
Okay.
So builders used to hire model makers to construct a model of the project they were going to build, and they did it with balsa wood and glue.
Okay.
That has changed. We are now in the digital age, and it's all done with graphical, three-dimensional databases and software.
Okay,
so
it's
I
like
work
trading. It's like trading again.
Kind of.
Kind of. It's digital, right?
So it's digital. I work on big projects, hospitals, university campuses, high-rise commercial buildings. Now, in those projects, there are a lot of what we call services: electrical, plumbing, air conditioning, communications like P2.
So you invest in those?
Well, all those trades, they're all separate trades, separate subcontractors, and they all have to install their systems according to the designer's design above the ceiling, because it all gets concealed. And so everybody's fighting for space, I want to go here. No, you can't go there because I got to be there. And so the general contractor, he holds this process online, digitally, where everybody models what they plan to install physically. And we look at it and we negotiate who's going to move where, so that in the end, everything fits. That is way more efficient than just allowing those trades to show up on the job as the building's going up.
Okay.
And arguing amongst themselves over who's going to be where. That can get very expensive, because you install something, now you've got to take it down, throw half of it away, and then put it back up again. So your profit just went out the window. So on big projects, complex projects, it's now the industry standard to do this digital coordination process at the beginning of a project.
So when you started with how much? Like at 25 years old, how much did you start with?
At 25 years old,
No, when did you start trading? Let's start with
Oh,
that
trading.
question.
I started trading a year ago with $2,000.
Oh, I thought you have been doing it since you were 20. Okay.
No, the trading, I've been interested in trading for quite a while. I tried subscribing to different newsletters
Yeah.
and you know, buying and holding, and did nothing but lose money.
Oh, okay. Now,
I've probably lost thousands of dollars doing that.
okay, so when you started a year ago with 2,000 and you made 50%, does that mean you now have 3,000?
Yes. Isn't that nice?
It is nice. So you did win that bet that you will make 50%.
Mm-hmm.
So when you started trading with the stock market, like a $15 stock?
Yes, options only, just options.
So I can start with 2,000 and next year I'll have 3,000?
Yeah.
All right, I'll give you 2,000.
No. You don't give anything to me. I
No,
teach you how to do it. That's the way I roll.
you're not managing my money?
I'm not a money manager. That's a highly regulated industry, and I am not
Licensed.
presently licensed to do that.
Yeah, but you can take up to 5 private clients.
Projected numbers in a year will be 10 clients, say.
No, the SEC allows you to take 5, I think, 5 privates.
Do they? I did not know that, as Mr. Carson liked to say. I love Johnny. I did not know that.
It's a highly stressful job. That's why people prefer to manage just a limited number of people.
I would not want to manage anybody's money.
Oh, not even 5. Okay.
Not even 5. I happily teach you all day long to do it yourself, but I ain't doing it for you. Sorry. No done for you here.
No, I mean, I can try it and see if I make 50%. But if I lose 50%, then I'll get out of the system.
Here's the way I do my offer of coaching. When I wanted to learn, I paid somebody about $8,500 to teach me.
You did?
I did.
You paid $8,500 to make 1,000 in 1 year?
$8,500. Yeah, because over time, I'm going to get it all back.
So over time, you'll make back your 8,500.
Yes, and if my construction business picks up, I'll have some more. I can boost that fund and I can accelerate the rate of growth.
Mm.
I found myself unemployed when COVID hit. And so my income shrank to just my Social Security check.
Oh, that's too bad.
It's taken me.
Why can't you keep working as an entrepreneur?
Last year it took me. Last year I only had like 2 months work in construction.
2 months what?
2 months of work.
Okay, 2 months of work, and then
in the construction business. The rest of the time, all I had was my Social Security check.
Okay, now in the construction business, you said you can do it online digitally. So why can't you do that?
I can only do it when I can find the work.
Oh,
it's very competitive. There's a lot of people doing it.
No, but as a self-employed person, you can invest in digital real estate.
I suppose I could, but I don't particularly want to touch real estate.
Oh, okay. So you're not familiar enough with construction online?
Only from the aspect of doing the modeling and the coordination.
Okay, so but besides that 1 year where you started options, in the past, you said you have invested and you lost money in stocks.
Yes, well, most of the money went to the people that were selling me the information.
Okay. Okay. That's not fair to you.
The information I got, I wasn't educated enough to do anything with.
Okay.
And so I simply did a lot of learning and no investing.
I see.
And I thought to myself, this isn't really working for me. I need to do something different, which was when I found this gentleman that taught me to trade options.
Nice. Well,
So
I have learned...
the way I do this for other people now, now he's taught me, I can teach others and I can charge them $8,500 or I like round numbers. So I'm going to be $10,000. But the way I structure it is through an idea we call risk reversal. So if somebody like yourself wanted me to teach you how to do this options trading, I would get you to commit to putting down 25% upfront.
Yeah, except for...
And you would not, and then you would not pay any more until we had reached our first milestone and I had shown you that you were profitable to the tune of, 10% or 15% of your annual 50. And assuming that you had done that and you were happy, then you would pay me some more, and you would not pay me the balance, the other 5,000, till the end of the year. You had made your 50%. If you didn't make it, you don't have to pay me.
Yeah, that's nice. But when I was younger, I did study the stock market and all that. So, but I let my license expire. So it's not that I'm totally ignorant. I had to pass a test to make sure I know my stuff. But
you'd be a special case, because most of the people that would come to me would be totally inexperienced.
Oh, that's right.
So
but I had
if you wanted me to show you this option strategy, we would negotiate something different.
Yeah, no, because 50 questions of the test, Series 7, is on options. The straddle and the put and the call and the covered call and all that. So 50% of the 50 question of the 200 questions were just on options. 50 questions were on the bonds and government bonds and corporate bonds.
Right.
50 questions were, of course, on trading and all that. But to pass that test, you got to learn all these things.
Yes, and it's a lot. And getting your head around how options work is quite complex.
I know, because after you get your license, and if you don't practice it, then it becomes stale and rusted.
Yes, the easiest way, the way it was explained to me, the way I explain it to other people, it's if you understand automobile insurance, and most people do.
Yeah. If
you want to drive your car on the road, there's a risk, and so you have to cover that risk with an insurance policy.
That's right.
It's a contract. It lasts a finite period of time, normally 1 year. And if at the end of the year, at the beginning of the year, you paid your premium. At the end of the year, if you didn't crash the car, the contract expires worthless.
That's right. They keep the money.
They keep the money. you keep the asset. Now,
I know. Sis, that's insurance, even for fire of a house. Most people don't get a fire, but the insurance company pocket the money, and then if there is a
yes,
fire, then
yes,
they have to disperse.
yes. And so a lot of people don't understand life insurance. They don't understand term life insurance versus whole life insurance. But once you understand the insurance concept, the person that's taking the risk is keeping the money, and the other person, if it doesn't work out, loses that money.
Right.
And so puts and calls are the same. You sell a put, you keep the money. You buy a put, you pay some money.
Right.
It's like I buy an insurance policy, or I'm an insurance company and I sell an insurance policy.
Right.
So I like to be a seller.
Well, that's good that you like what you are doing, because if you do it for 14 hours a day, you must like it.
Well, I'm doing other things. I told you I'm in the insurance business, so I am always looking to expand my customer base and meet people and get referrals, and that takes a lot of time. I'm active on social media for the same reason, that I like to meet people. That's how you get customers. You build relationships, you get trust, and hey, you got this problem. Well, I got this solution, so we can do something here, Yeah,
Well,
that takes a lot of time.
Yes, yes. So I guess I'm going to put you under the show all about your profession, because that's your profession.
Yeah.
And then I'll put consultant, coaching, trading, insurance in the description. So I think I have all your contact info on LinkedIn. And it's interesting that some people like it enough to do it for such a long time. But I enjoy learning your side of the story, which is sometimes different than from someone who does it as a profession, with clients and things like that. Although you do have clients, but the coaching is different than actually trading other people money. You don't do that. You just coach people.
I don't do that.
Right.
Way too much risk for my comfort level.
Oh yeah, you cannot sleep at night handling other people money, right?
That's exactly right.
Okay.
Exactly right.
So thank you so much. You have explained very well what you do. Thank you so much, and enjoy the rest of the weekend. Have a great day.
I try. Thank you, Ale.
Bye.